What's up, guys? Welcome back to Kryptonite because I believe that cryptocurrency and the blockchain are the kryptonite of our modern financial system, and I love it, guys. We got some crazy things going on with Bitcoin right now, especially on the lower time frames. You might see me lose a trade live, which I kind of had a feeling eventually I was going to lose a trade on this pattern because eventually the pattern breaks and eventually you will lose on one of these trades. But that is just the name of the game with trading. You play the probabilities, you win. I've been on a nice win streak lately, winning a lot of these trades, and I knew eventually I was going to lose because I knew eventually this pattern would break to the upside at some point. And that's just, again, if I can trade the pattern 5 times and be right 5 times and then be wrong once when the pattern finally breaks, that's fine. That's the name of the game with trading, right? We manage our risk. We take those 5, 6 trades. We know that we'll win 5, but we know that we'll lose that one once it finally breaks. And we could be seeing a break right now from a pattern on the lower time frames, showing that we might have some upside here for Bitcoin. So, guys, I've been preparing my charts a little bit better lately. I want to give you guys a nice, cleaner experience here. So we're starting off here on the weekly charts, showing our nice falling wedge here, which we also have gotten our nice support from our previous all-time high here, right around 19,000, and we're holding on strong, potentially making a double bottom. I've been talking for a while about the candle formation of the tweezer bottom, where you get literally no space in between. There's no difference in the price, right? It literally bottomed and then immediately going up. This is a very bullish candle pattern that still is 2 days away from closing on the weekly charts. Something I've been talking about on my channel quite a bit. Let's jump down to the daily time frame, where we can see, of course, guys, I'm sure you know about this. We had our bear flag. We broke down out of it. We've had subsequent bear flags here, and now we are consolidating into a symmetrical triangle. You could call it a bear pennant, and it is wanting to break out right now, potentially attempting one while I'm in a trade. So my heart's beating a little bit, but at the end of the day, it's not a big deal if I lose this trade because I played the probabilities. I went with what I saw, and I knew that eventually this pattern might break to the upside. So let's take a look on the lower time frames and let's see if this pattern, and pay attention real quick to this trend line here. This has been playing a big role, you'll notice, in price action, right? We got rejected from it. We broke above it, retested it, shot up. We've been really hanging around this previous trend line, just enjoying that nice little trend. So keep an eye on that trend line as we jump down into the lower time frames. So here's a 6 hour. As you can see, it's kind of wanting to maybe break out. I mean, you could potentially, pull this back a little bit if you wanted, although losing that many touch points kind of invalidates it somewhat. So I'd still say you'd want to, I tend to like to have my patterns as far out as possible just to prevent liquidity grabs that, if you had your pattern super tight like this and then it broke out, you would be like, oh my gosh, it's breaking out, when really that's just a liquidity grab. And really, if you pulled it back to the farthest points, you would see that, hey, maybe it's not quite so bullish, right? So it is attempting this breakout. As you can see, it spent some time above this line before getting rejected back down. It is fighting, and honestly right here, guys, what I'm looking at is a potential triple bottom. It's not that clean on the lower time frames because you have this weird looking dip here before these two nice clean bottoms here. But if you jump to kind of the higher time frames, it looks a little bit more clean, right? 1, 2, 3, nice little triple bottom right here. So triple bottom price target is pretty much where this break occurs, and if this break closes with an hourly, I'd probably say at least an hourly candle above strong with volume, then we are headed for higher price targets. We would take the very top of our basically triple bottom, the very bottom price of our lowest triple bottom, which is right here, place that right here, and we have our price target, which would be around $21,200. It obviously have to get past this resistance here too, so there's no guarantee it hits that price target. In fact, oftentimes they don't always hit right there, but this is just an idea of what could happen depending on how this candle finishes. If we get some volume support, if we get a nice close here on a later candle, obviously it's still 8 hours left in this one, right? So we still have lots of time left with this candle. But I'm trying to stay on the longer time frames because the shorter time frames are it's like wanting to go hit my stop loss so bad. So again, that could be a price target potentially that we could see if we break out of this What I think is a potentially, I think it's a triple bottom, honestly. I know this one looks a little wonky with the way we went into this bottom here. You could also treat it like a, symmetrical triangle breakout, which kind of basically has the same pattern. This is one is maybe just a little more conservative, right? So they basically have the same pattern, symmetrical triangle, triple bottom, call it what you will, but they're kind of the same thing in essence, honestly. So right now we're fighting with that line. Let's jump down on the lower time frames. You kind of see what is going on here. As you can see, wanting to break out, but fighting here with this resistance. And let's go on the different chart here so I can show you guys. I know it's a little dirtier. So this is my trade right here that I'm in. You can see I saw that we had some nice bearish candles here at this resistance level, that we are oversold on the 15-minute RSI. Not the greatest spot for the hourly RSI, if I'm being honest. I would have liked it if the hourly RSI was higher. That has a little higher probability. So I know this wasn't the best possible setup. It was kind of a mid-tier, I'd say, probability trade. Of course, we had the stochastic oversold overbought. I keep getting those confused. The stochastic overbought here on the 15-minute RSI as well as the hourly RSI, which I thought was a pretty great indicator that we would get resistance here and we would break down and continue this pattern here. Because I want to show you guys, actually, let me pull back the other chart I had. So right here, we've got our falling wedge pattern, which has been playing out for quite some time. It's been very clean. It's been respecting it pretty well. Those bear flags played out within this falling wedge here. And as you can see, we kind of got somewhat of a mini-ish breakout potentially. Now it has to break we want to see it break this previous high here before we're gonna be saying that we're going up, right? But a falling wedge, obviously the price target is all the way back at the top of the wedge, or usually you want to like take profit at different points here. Take profit here, take profit at this bottom, right? Just in case it doesn't make it all the way there. But as you can see, there are some bullish things brewing in the Bitcoin price. Again, it's fighting with this level. So there's potentially this breakout from the symmetrical could also then make a breakout from our falling wedge pattern more legitimate, in which case we could be seeing some big upside for Bitcoin. Now, why I think this is not going to happen, if we look at the DXY right now, and maybe it's changed since I've seen it. So this is the DXY. And as you can see, we got nicely supported here, big run up. The dollar, this is like the highest the dollar's been in a long time, since like 2002, right? So the dollar is absolutely doing phenomenal right now in this environment where the Fed continues to raise interest rates and continues to make holding basically any sort of risk asset basically not work out. So, but as you can see, look at this. This looks like a very nice bull flag pennant that has a higher probability to break to the upside. And the price target for this would be quite substantial. Now, again, that's just a probability. We could absolutely break down out of this flag and we could come down to retest our previous nice red support line here, which, I mean, I think that could be just as likely as the breakout, because we did get pretty overextended here from our, not too extended from our 21. As you can see, it kind of respects those moving averages. And so, yeah, maybe it does break down and comes back, gets supported here by these moving averages, gets supported by our trend line, and then continues up. I mean, as far as we know, the Fed's going to continue to do what they're going to do right now. I don't know if there's any sign of that stopping anytime soon. So that's why I'm thinking that this could be sort of a false breakout or sort of a breakout attempt that's going to fail. The other evidence for that is this as well. Let me show you the volume. So this is the volume on this particular move here. Now, as you can see by this nice wave here, I really like this volume indicator. We're actually decreasing in volume, right? We had this upswing here, a little bit of rise in volume there, but overall, we're seeing this decline in volume. Usually when you see an upswing that is declining in volume, that is a sign that trend is weakening, that there's just not enough volume to support people continuously trying to push the price higher. It's sort of people are losing interest in the move. So I do think that this is going to be a little bit of just a liquidity grab. And funny story, guys, earlier today, I'm looking at this chart. I'm considering whether or not I want to get into this trade here, which you can see, look how we are flirting right now with my stop loss. A decent chance this trade might fail. And I was thinking, man, things have been too quiet, right? I've been winning these trades pretty consistently. I won this trade yesterday, which I'll talk about later. And it's been respecting this trend line. And I'm thinking, it's too easy. It's too quiet. There needs to be some sort of liquidity grab, right? It's inevitable that big money knows, traders are looking at these lines, knows traders are saying, oh, we hit this line again, I'm just going to short it, maybe without even looking at any indicators or anything. And so they want to do what's called a liquidity grab, and you can see it kind of happen. You can see this play out right here. You've got the resistance line, it starts to curve down, right? A bunch of people jump in shorts because they think, oh, here we go, we're headed back down. And then boom, one big candle, break the previous high, and then potentially, if this is a liquidity grab, it's going to then dump back down into the pattern. So that's what I'm kind of waiting to see what will happen. And I even set my stop loss a little higher because in the back of my mind, I thought there's got to be a liquidity grab coming soon. It's inevitable. It happens so often where you just get that next little. Let's see if there's any examples here. Usually you get like a pump up, and there's one more here that, boom, that one takes the liquidity. Anyone who had too tight of stop losses takes them, dumps it back down, right? Because the big money needs that liquidity. They're making billion-dollar trades. They need all the liquidity they can get before pushing the price down. So this, I don't know, guys. I mean, I guess so far, from what I'm seeing, I'm betting on this being a liquidity grab. I'm betting on this coming back down into the pattern and us continuing what we were doing before in our falling wedge. Mainly just because, again, no volume. The volume is not increasing. It doesn't mean that it's guaranteed to go down. And again, I think being, oversold on the stochastics as well. But this could be a legitimate breakout as well. Definitely something to keep our eye on to see. Again, I think we do need to see a lot more volume, though. I think if we're going to call this a legitimate breakout. Let's even see where our moving averages are. Okay, so we did break above the 200, or the 200 moving average there on the 15-minute time frame, and we did break this resistance here. So we'll see on the longer time frames. I'm sure it's not. This is why we wait sometimes, especially on these kind of breakouts. We wait for the long-term candle, right? Because right now this is the 4-hour candle. It looks pretty decent right now. It looks like we could finish. If we finish strong here, maybe it's a legitimate breakout. But if this finishes in the next hour and 42 minutes, wait, no, that's a minute. Oh shoot, there's a minute left on that one. Okay, so the 4-hourly candle right now, I wouldn't, to be honest, that candle to me isn't quite strong enough. I would want to see a much more full candle close, so I'm going to still be hesitant. On top of that, we got the 4-hour 21 moving average, which has been resistance here multiple times. It's very close to that resistance point. So this could eventually, we could come up, we could hit the 21, and we could then continue the trend, right? A lot of times on those higher time frames, these moving averages are really powerful because, we might, on the 15, we might break through the moving average and you're thinking, oh, everything's sky is clear. And then you jump over to the, 4-hour and you can see, oh man, like this 21, look at this. We hit the 21 here, got resisted, down. We came up here, got close to 21, down, 21, down, right? So until we, on the higher time frame, start to break above some of these moving averages, I am still remaining bearish here. And I'm still holding my short position because I'm a good trader now. I hold my trades. If you've been watching my videos, if you've been following me, I struggle with holding my trades because I see that moving up and down, and I start to overthink and I start to analyze, and I get into trouble and I lose trades because I just moved my stop loss too close and I got stopped out, and then my trade made the move, right? So while we're actually talking about my trades, let's talk about this trade from yesterday, and I'm going to pull it up here on my log so that way, because I kind of have it written out why I got into the trade. Yeah, paste and go. That's exactly what I want to do. Thank you. By the way, guys, use the Brave browser. You actually get paid to browse. So here's the trade I made. As you can see, we had broken from our broadening ascending wedge here. We broke down, we came up, we retested that with a nice hammer bearish candle with some continuation. I did get into the trade at this point. I'm not going to lie, the indicators were not very strong for this move, but I was kind of more looking at price action over the indicators, and I thought this was just a textbook break from a pattern, retest it now, and this is a bearish pattern, right? The pattern target of this actually got hit, right? Came all the way down and literally almost hit to the T, the bottom of the broadening ascending wedge, which is the target pattern. So bearish pattern, breakout, retest. uh, based on price action, based on hammer candle. Again, we got rejected from our long-term falling wedge here. We hadn't yet come down to retest the bottom of the pattern. Again, the DXY, when I was looking at it, was at a strong support level, which was again just another confluence that this, we are going to continue down and make one more move down. So I did get into the trade here. Again, I set my stop loss pretty high, which I've been trying to do more often lately because again, you worry about those liquidity grabs where it's going to break that price and then it's going to get liquidity and then it's going to dump down. So I had my stop loss. Look at that. We're talking like $20 within my. I've gotten. Call it luck, call it skill. I don't know. I've just learned with stop losses how important they are. That's multiple trades now. If you've watched my last couple of videos, where I'm like within $20 of being stopped out, and yet price goes in my favor and I win the trade. Right? Call it lucky, call it skill, call it whatever you want, call it both. But I've learned stop losses are literally paramount to your survival as a trader. If you take a trade and your risk to reward is less than a 1.5 and you have to move your stop loss to a more vulnerable place, just don't even take the trade. It's not worth it. Your stop loss is everything. If it is not in a spot that has heavy support or resistance, then it's likely to fail. So here I had this horizontal resistance. I had quite a significant number of pips here from my hammer plus the trend. So that gave me just enough, guys, just enough to then come down and win this trade. So pretty excited about that one. I also want to trade on US 30, which is the top 30 companies. And this was a beautiful trade here. Let me just jump back here. So we're in this long-term downtrend here on the, and it's a little dirty here. Let me get rid of the average. So we're in this long-term falling wedge here again on the US 30. And so I just kind of jumped in. We had broken this resistance level pretty strong. I got a nice indicator from the, actually I need to, I'm not going to break down this trade yet because I actually need to go, so I need to go through it and look at everything before I talk about it. So we're gonna forget about that one for now. So as you can see, guys, I'm in this trade right now. I still think that there's a good chance we roll back over and come back into this pattern. Now, again, I might adjust I had my take profit pretty aggressively. Actually, I have a limit order set around here and then another one set here because I don't necessarily think it's guaranteed it's going to come all the way down here. But so if it just comes down to here, I take some profit here and then take some profit here if it comes all the way down to the bottom. So we'll see. This triple bottom looks pretty sexy, I'm not going to lie. But often triple bottoms fail very frequently when you think they're going to pop because they're very rare that they actually succeed and go through. So the odds of this one being a winner are slim. And on top of that, if we just look at, again, we are not seeing that volume pick up. And also look at this. This is actually, I was waiting for this as well. We have a confirmed 15-minute divergence right here. We've got a high and a lower high and a high and a higher high. So that is a 15-minute classic RSI divergence. Again, oversold in that stochastic. I don't know if the higher time frames are showing that either. It's not quite confirmed yet on the hourly, as you can see. It wants to confirm, and if we get another red candle or two, that will confirm a bearish divergence on the hourly. Again, supporting my decision here on a potential. This was just a little liquidity grab, fake out like a lot of these are, just wicks up, trick people, and then take liquidity back down. However, though, we are reaching the crescendo. I saw some analysts saying this is what's called a diamond pattern, which if it's in a downtrend actually has a bullish breakout. And if that's the case, then we are really nearing the end of this pattern. We are going to see a movement here. Something is going to happen, right? It comes to the point where it crescendos so much where something needs to happen. It's going to happen. It's like the buildup of the anticipation and human emotion before a big action. So if we go back to my first chart there again, now according to this chart, we still have a little ways to go. We could come back down, come back here. So there's still a little while till the crescendo of this pattern, which again would support my trade of coming down. But we'll see, guys. This is definitely something to watch. This is something to keep an eye on. The biggest thing I am looking at, and I know I'm repeating myself here, but this is almost for myself as well. It looks like we have a little bearish divergence on the CVD indicator as well, which is bearish as well. It hasn't, I would say it hasn't confirmed yet. This one confirmed, no, yeah, this one confirmed here because we had our higher high, but this made a lower high. And then we've got one here as well that you could sort of say the same thing. So things looking bearish. My stop loss might hold. We will see, guys. We're crossing our fingers with this trade. Yeah, that's all I got for you guys, I think. Again, the DXY, like I've been mentioning, is, this is the time in the market where there is a lot of things that could happen right here. Let's say the DXY breaks up out of this bull flag. Well, obviously Bitcoin's coming down, right? Risk assets coming down, everything else coming down. If this goes negative though, and then Bitcoin then breaks out of those patterns, then Bitcoin could see a significant rise, like we talked about, to the upside. So this right here in the next hour to 2 hours, we'll see if this, the DXY is gonna make a move. I wonder if it'll make a move live here on camera, but now is the time to be on the charts, guys. There's in the next couple hours, and again, we're going to see some openings here of the different sessions. In fact, let's find out. I have a chart here specifically telling me when the opening session here. I think it's not till 3 maybe. Yeah, it's not for a little bit. Where's that one? I have a really cool chart that shows all the market sessions here. Yeah, we're still in the Tokyo. We still got a little ways. So it's not till about 3 a.m. about that. Oh, it should be less. It shouldn't be 5. That's weird. Anyway, we got some time before any big decisions are made in the Tokyo session. Usually when the London session opens, the Frankfurt and the London, that's when you get some sort of bigger volatility. Some of the traders wake up. So, well, it's looking like it's gonna come. It wants to come back down. But also you can then say too, it's a little bit of a slight bull pennant potentially. If you really went down on the lower time frames, you could be like, hey, look, we got a nice little downtrend here, and we got a little, here. You probably want to make that more like this. Sorry, it's kind of weird. You can't really see those because they're in white, but. So we'll see. You could say that's technically maybe a bull flag. Oh, are we seeing some movement here? Ooh. Yeah, I try to stay off the short-term charts when I'm in a trade because they trick you. So we will see, guys, if this trade holds. Again, I'm leaning. Where's my volume? That's what I'm watching right here. It's just this. Look at there's no volume, dude. There's none. Now maybe once the Tokyo session ends and London starts, that's when you might see volume pick up, and that's when you might see the breakout. But as far as this Tokyo session, which tends to consolidate in the Tokyo session, with this volume going down, I think we're coming back down, to be honest. I could still lose the trade potentially if the London session opens and then we do get that push. But as of now, I think we're definitely coming down. I'm not too worried about it. So again, look at the stop loss placement. Keeping me alive in this trade, people. Whew. All right, guys. So that is pretty much all I got for you. We can just check out Ethereum, and then that's pretty much all she wrote. There's the NASDAQ, kind of fighting in its own falling wedge there. I don't look at Ethereum too often, but I'm actually kind of curious now just to see what it's doing. See if it's going to give us any tells on Mr. Bitcoin here. Look at my previous drawing, my little head and shoulders drawing as from before. Nothing really new. Not going to lie, guys. Now that trend, that looks more like, let's see here, some live TA on the spot, unprepared. We're gonna see if we can find a pattern. That's what I'm always looking for patterns. Okay, we're getting out of this freaking white. Give me some red or something. Okay, so let's see if we can find a little short-term pattern on Ethereum. We like to connect the tops. And it looks like just an upwards channel. I'm not seeing any sort of particular pattern playing out. Yeah, I don't see anything crazy. So it just looks like a pattern. Maybe on the shorter time frame, we can find something a little bit more concise. Maybe a little falling wedge here. Ooh, okay. Here we go. Here we go. Here we go. Ooh, okay. So on the shorter time frame, you can see on the 15-minute, possible rising wedge has a bearish breakout, could break down, come back to this channel trend line, patterns within patterns within patterns within patterns within patterns. Don't you love it, guys? Don't you love it? Actually, that's my favorite part about trading is just finding patterns, 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 patterns. Because it's price action respects these patterns crazily, and so if you can find a good pattern, it can make you a lot of money. Nothing else to report, guys, as far as the Bitcoin news. Again, we do well. Actually, there's one bit of news. Mt. Gox, which was one of the original Bitcoin exchanges, will be releasing their Bitcoin that people kind of thought they had lost, essentially, on September 15th, which is the exact same day as the Ethereum merge. So what the heck is that about, right? There's no way that can be a coincidence. I personally have this conspiracy theory that the government sees the potential that Ethereum could become centralized based on the new proof of stake, which honestly I think proof of work is a lot better and a lot more decentralized than proof of stake. Not a huge fan. I think to me, in my eyes, Ethereum has less value moving to proof of stake. It's also much easier for it to be controlled by central authorities because there are some large stake pools with a few different companies that control most of the Ethereum stake, and so they're going to have a big say in what happens on the Ethereum, you know, whether or not more Ethereum gets printed or whether or not certain transactions are censored, which the whole point of crypto and the blockchain is so, transactions are uncensored, that we don't have to worry about that. We don't have to worry about a one central entity that's corrupt who doesn't like another opinion or anyone. Oh, you disagree with our stance on this, so we're going to censor your transact. The whole freaking point of the freaking blockchain is to prevent censorship of transactions based off of a central entity saying we don't like what you stand for, we didn't like that you said that, we don't like that you don't support our bill, so now we're going to censor your transactions, right? The whole freaking point. And so now that ETH is proof of stake, it's kind of, I think, and a lot of people would disagree, but I think it's way more easily controlled because if the government puts pressure on these companies who have large staking positions in Ethereum, they're most likely going to capitulate unless they have a strong moral fiber and they're willing to throw away a lot of money and they're willing to just shut down instead of ruin the integrity of the Ethereum network, which a lot of, people aren't typically going to do that. Most people are going to say, no, I'm in it for me and I'm making good money. So, yes, government, I will censor these transactions or I will vote to censor these transactions on the Ethereum blockchain because I don't want to lose my company stake pool. There's very few people that would say, okay, we're shutting down. We'll lose profits. We won't be a shareholder anymore. We'll spread it out. So that way the network can still have integrity of that censorship less, ideals. And I just don't have a lot of conviction that that is going to happen. I think the way that it's set up and the way that proof of work is set up is sort of naturally creates that incentive to be decentralized as opposed to the staking, which sort of just hoard as much as you can and you'll have more control over the network. And I don't think that's how it should be. And obviously, it's not perfect, neither is Bitcoin, but I don't like necessarily the direct. And I think, maybe people are trying to get, hey, look, dump your Bitcoin, buy Ethereum, right? Look, Mt. Gox, they're going to release all this Bitcoin. The market's going to dump. Dump your Bitcoin, people. But the Ethereum merge. We're gonna triple halve the inflation on Ethereum. Dump your Bitcoin, buy Ethereum, right? Maybe that is the play by big players to try to create more and more kind of black swan dump of Bitcoin, or a bunch of people switching their Bitcoin for Ethereum, or a bunch of people just dumping their Bitcoin, and then they can buy in at super low bottom prices, maybe even below the 17,000 level. That's just a conspiracy theory I have. If I was a big player in the space and I saw the potential of Bitcoin and I wanted to buy lower and I could sort of make this scenario happen and make this narrative happen, then that's something I would, depending on my morality, I guess. I'm a big Bitcoin fan and what it stands for, so I probably wouldn't necessarily do that on purpose just to dump the markets. I'd hopefully be happy with however much Bitcoin I do have and just try to accumulate more at its current lows. But if you are, a big hedge fund, maybe you're thinking differently than little old me. That's just my take on the whole situation. And Again, I still think Ethereum is going to do great. I'm still invested quite heavily in Ethereum. I do, just like I'm not going to not invest in something just because it's more centralized. I invest in stocks and companies and different things that are very centralized, right? But I just trust their model or their product, and eventually, yeah, they could be some really corrupt people that could take over that position, and they could wreck the whole thing. You know what I mean? Hopefully, I've sold my shares at that point and moved on to a different company that I like their product or I like the way that they stand for, what they do. So just because it's centralized doesn't mean it's not going to succeed. But at the end of the day, we do need something, some form of money that is separate from government, that is able to be decentralized, that's not able to be controlled by a central entity, to prevent censorship of transactions. Because it's so easy for people in power to say, "Oh, you talked bad about me? You don't agree with what I say? Well, I'm going to censor your transactions now. Now you don't have access to your money." And we see that happening all around the world. We see bank runs happening in China and all sorts of places where either the banks either squandered away all your money, or you're no longer allowed to have your money because they deem you, unworthy in some way, social credit score or whatnot. So that is a dangerous, dangerous world that nobody wants, but definitely governments want, because it makes it much easier to control the populace. If I'm in government and I can cut off access to your money, your way to buy food, because most people in our modern day don't know how to farm or garden, as maybe in the past. Most people probably had gardens at home to provide some of that food, and then they use that to trade for other goods with their neighbors and such, right? No one has that nowadays. No one knows how to farm, so we basically are at the complete mercy of money. And if the government deems my social credit score unworthy because I don't agree with their policies and I might speak out against them, well, now they can cut off access to my money, therefore cutting off access to my ability to eat food. Most likely, and most people are going to bend to the control because they need to eat food to survive. So this is a scary world which we are moving towards, especially with the move towards CBDCs, which are government controlled central currencies. China's doing this, no surprise there. They want to completely control every action of their populace. So this is a fantastic way to do that, because now I can set limits on how much money you get, when that money expires, what you're allowed to buy with that money. I can set that with a CBDC to make sure you spend it and make sure you spend it on what I want you to spend it on. And if you try to spend it elsewhere, I cut off access to your money. So that is the future that governments are trying to push us towards, and that's why Bitcoin has come at one of the most important times in human history, that we have a digital money that we can transact with that is outside of state, outside of governments, to control and censor, right? It is crucial. It could not have come at a time where we need it more than we need it now. So again, it's not financial advice. I am not a financial advisor. Do your own research. This is just for entertainment purposes only, guys. That is my take on some cryptocurrency stuff. Again, still in our trade here, but we're looking like we're going to lose it, folks. We are not looking good for this trade. You win some, you lose some. And this could be a breakout here, guys. Anyway, I'm going to hop off, post this video, and then I'll be looking at the charts, seeing if we get some further continuation with some volume in this breakout. As always, save your money, grow your money, make sure to buy some Bitcoin, because we all know that fiat currency is the ultimate meme coin. It is going to zero at some point. Buy the thing that there's only 21 million of ever, and actually less than that, because a lot of people have lost their Bitcoin forever. So there's less than 21 million Bitcoin available for the entire history of Bitcoin. See you guys on the next one. How do I stop it? We're still on right now because I don't remember how to stop. Here we go.